It's a new month, final month of the year, obviously. December is with us. How was your November? How was your trading November? Make money? Lose money? Both outcomes are possible. Problem is, most people lose money because they risk too much and they don't know what they're doing. We're here to help you, okay? And trading with company like theproptrade.com, we're very much on your side. So our Black Friday promotion is still available, so check out the website and see some great discounts there and big refund on your initial investment should you make it to the funded traded account. So more on that I say later on. So new month, I say new week, new day. We've got a stronger dollar this morning. Let me just make the chart a bit bigger, get rid of my ugly mug. Still got t-shirt on again, guys. There we go. Looks great, doesn't it? I really like it. So let me just get rid of me. This marvelous Monday morning. There we are. So gold. This is the daily chart on the gold market. Still suffering from that big sell-off we had on the 25th. Bit of recovery last week. Then better Friday and third. Obviously, markets were closed. Or the derivative markets were all open, but the major market of the United States was closed, obviously, on Thursday in a very short day. On Friday, stocks closed positively on Friday and up for the day and up for the week. More on that as we get to the indexes. But as far as gold was concerned, we were down for the week and down for the month. If we just look at the weekly chart for all you gold traders, we're down, quite a significant down week last week from a very positive midweek of November, and then following the obviously election of Mr. Trump, and a big move down into this key level below the 2,600 level for the week of the election, and then we recovered, but then we've come down. So we haven't recovered all that gains we had ahead of the election into the end of October, as we said last week, and then we're down again this morning on a stronger dollar this morning. Chatter that Trump might sort of reverse the rhetoric from the election process and months before. Summer, he was talking very much about a weaker dollar. He's just that may seem to be cooling in the light of actual getting behind the Oval Desk again. So oil, everything has suffered because of that this morning. So we've got a stronger dollar, particularly Swiss franc is particularly weak this morning. Gold is down. So here on this hourly chart, it was triggering short in the late trading of last week, and we continue to decline this morning into the new month, and we've been as low as 26.22, 266.22. So we're still holding the key 26.25 support zone. And we're still holding the key, obviously 2600. We're still significantly above 2600, and we've bounced in early European trades this morning, and we're back at 26.36 for gold this morning. So this strategy was short here on this hourly chart from the candle of the 1600s, 1800. Sorry, 6 o'clock candle on the 29th, and it's probably just closed out. Now down here at 26.33, so we've got a move down there of 26.52 to 26.33, just following this simple crossing moving average strategy and getting out on the breach of the second moving average. I explained how to use that on Friday, so watch Friday's webinar for details on how to use this very, very straightforward, simple moving average strategy. So that's gold. I'll have a quick look at the other markets, and we'll come and have a look at the week ahead and the month ahead and how your November did for everyone. Let's go back. Let's go back. Say the indices. So the Dow is currently trading at 44,927. This is obviously the derivatives. On Friday, the market was closed and we were up 44,900. We were up 1.39%, so nearly 1.4% for the week. A good month as well for the stock markets, obviously to the upside. So again, if we just look at, quickly jump to the what a strong month, strong rally the stock markets have had. More on this, I'll say in a little while when we talk about December, but a big rally. So maybe some cooling in December, but December is typically a strong month as well So although we're at all-time highs, although we've been testing that 45,000 handle, we've been over it for a couple of hours last week. Don't be surprised if we continue to move higher. Equally, I know it sounds a bit of a caveat. We could obviously see a bit of a cooling this month because we've had such a strong 2023 and 2024. So particularly here, this is This is going back to October 2023. So this is last year and a bit. And it's, the stock markets have been rallying. So if we look at the weekly, particularly strong in the election week. And continue to move higher, and very well bid the 20-week moving average all the way down there at 43,238. So no reason to get off your surfboard. That trend is very much in place, and the rally has been going on for many years. And I'll say more on that as we look for what might happen in December. So stocks were up last week, up on Friday. Let's just quickly run through the others. The S&P 500 was up. We closed on Friday. It was earlier. The 1.06%. We were 6,032 into close. We're currently around that level now. I don't know if that market's actually open here. Yeah, well, it looks like it, doesn't it? Yeah. So again, consolidating at all-time highs again. So again, bull move. The key 20-day moving average is all the way down under 6,000, 5,950 now, rising toward that second half of 5,500 for the the 20-day moving average, and the 50-day moving average, you can see, is held for over 2 and a bit months here. We were last under the 50-day moving average here at the end of at the beginning of September. So we've had September, October, and most of November, obviously. Sorry, all of November. So 3 months, and the 50-day moving average all the way down there at 5,857. So stocks remain bullish. If the dollar is going to strengthen into the year end, this might see a cooling of the stock markets, but we'll see how that pans out. Obviously, a lot depends on what the Fed do. It's priced in, or priced in completely, but a 65% chance that they will still cut rates in December. I'll say more on that when we talk about the central banks in a minute as well. So stocks up, the S&P, and the Dow we've looked at. Nasdaq 20,900. The Nasdaq 100 again, not quite as bullish as the other two. Tech stocks worried about rising potential that the interest rate cycle mightn't be as aggressive as many expected. So, but still, as I said last week, the 20-day moving average has held really, really nicely. Again, tested last week, and we're off it. And the 50-day moving average for the Nasdaq 100 is at 20,425 this morning, and continued to rise since the big rally from this mid-September move here. So, all-time highs is testing the 21,200 level. Will we see that in December? Possibly, possibly not as well. But yeah, the trend remains to the upside. So be careful trying to get too bigger positions short in the stock markets at the moment. Would be my view of that. It's not advice. It's just what I'm seeing from the charts. As far as the major crosses, the major currencies are concerned, the euro continues to be under pressure. This is a daily chart for the euro, as we talked about last week and over the last few weeks. We've been under 105 for a while. Last week we had a nice rally into the month end, but we're down again this morning on the stronger dollar. A lot of it to do with comments from Trump. Remember his administration, all the big jobs now filled with loyalists, filled with people who will follow through on his agenda. Love it or hate it, that's what's going to happen, clearly, or try to happen. There's going to be very little resistance through Congress. Remember, the Senate and the House, led by the Republicans. Their lead in the House is under pressure because some people have had to resign their positions to go and join the government, but still looks like the vast majority, 90% plus of his ideas will look like they will come to fruition. How aggressive they are with all these policies particularly the trade policy, particularly with a view to China and Europe, I would argue. It will be seen in the detail, as ever with politics. The rhetoric is easy, especially when you're in opposition. When you get your feet under the table, as Trump knows, he's been obviously in the Oval Office before. Things can be a bit more difficult, but this time, he's got some old scores to settle, which many are worried about, and he's got a much stronger mandate, he would argue. And the results bear that out. Some have questioned how strong that mandate is, given the spread of the votes. But either way, the result is Trump True is coming at the end of January, and the idea of a weaker dollar may come under question. That's all we're saying at the moment, and why we've got this weaker euro this morning again. But I mean, the trend remains very much to the downside. The 20-day moving average now is a key area we want to be looking at. We need to break and hold 106 if we are going to move to the upside for the euro dollar pair. Doesn't look like that is going to happen as far as the central banks are concerned. They're both about, ECB and the Bank of the Fed are looking to cut in cuts in December. It looks like the outlook for Europe is still very, very sticky. Much stronger outlook in the US. We'll see that this week as how those jobs numbers come out, the on-farm payroll and ISM data this week as well for December. Some key pieces of data in December. So don't pack up yet. There's a lot of opportunities in December. Many people over the years sort of slow down or withdraw their funds, want to spend money at the end of the year and Christmas and other holidays. But really, it's really time to be the professionals start to invest very aggressively in this period of the year, December, January, for the coming quarters, coming year as well. So I say more on that later on if we run through the charts. So euro today, let's just look at the details. We've got a stronger dollar today. So again, this morning we had a break of the 20-hour moving average, and we continue to move into the key 105 area again. So see how clearly some automated buys at 105. Excuse me, my coffee. It's quite mild this morning. I can see some blue sky, but it's the clouds sort of building up here in not so sunny London, but a bit milder than it has been over the last few days. So euro to the downside. So shorts in place, buys at 105 today for the euro. Sterling, similar sort of pattern here. If we go to there's the hourly chart, so we've been down, not as aggressively as the euro this morning, trying to test the 20-hour, and it's a bit looking to actually move back up here. Sterling 127 is where we rattle through at the moment. So again, the round numbers coming into play, but there's not a lot of data today to move these pairs around, to be honest. So the chatter in the early start of the week and start of the month of the stronger dollar is not playing out here in the sterling chart. So 127 key as we move forward today. 127 has been breached at the moment, and are a bit flat moving averages there, not really directional, have been moved down. And again, you can see buyers logging in there at 126.80 this morning for cable. Yen, on the other hand, continues to strengthen. We went rallying through this hugely significant 150 level earlier late last week and earlier. Beginning of last week and late last week as well. So into here we ran from it back to 152, but we're down through 150, and again we're still trending to the downside. So the yen, some comments from government leader of the Bank of Japan, Ueda. Again, this is proper divergence here, that they may actually increase rates again at their meeting this month. The Fed, again, it's about a 60 plus 65% chance of them increasing rates, whereas there's like a 65% chance of the Fed decreasing rates. So clearly, markets are expecting this trend to continue. It hasn't really followed through as much as perhaps many were expecting on Udea's comments this morning. So 150, there's clearly some buyers around here last week. That looks like that's playing out again this morning. Less, you can see the size of the candles are less vigorous than the rally when we breached that and went down to 149.50. So it was a 50 pip sort of low move over the on Friday and Thursday, but we've been back up there. But as you can see, the 50-hour moving average here is providing big resistance to the upside. So if you're trading this today, we need to breach 150.50 quite significantly for this to move up to the upside. If the dollar's going to come back with any strength, as you can see, it's muted against. It was stronger against the euro. It's muted against the sterling, and it's also very muted against the yen. But that's because of yen strength this morning. So 150 very much in play. But obviously, we've had a very significant move in these currency pairs. Obviously, from the weakness of 140 here, just back in September, the dollar, catapulted to close to 155 here. This is the top here was 155, 55, and we went to close, just shy of 157, didn't we? Just in mid-November. So, but the turnaround has been very significant. This is quite typical as well of a strong, nice, steady, strong rally. This is why the moving average is going to be so important for you. You see here the nice big break of here on the 2nd of October, and it took all the way up before it came back under the 20-day moving average, the 26th of November. So lots of pips to be had on the dollar yen on the way up, and similarly on the way down. Big staggering, buyers, big sell-off. That was your first shock. Oh, we can't hold 155. Bit of consolidation, then a break, and then a significant break. The break of you can see the 5 and the 9 broke here on the 25th, and then on the 26th we had the break of the 21-day moving average. So this strategy then went short on an end of day basis and remained short as we go into December, as we breach 154, which was a big 155 and 154, some big 151 and 150, some big support areas. The channel we were talking about at the end of the middle of November was this one, wasn't it, on a 1-hour chart, the 154, 153, 155, 154 channels where we were. But I say for end of day traders, they've been short here since the 26th and very much in the money from 153 or 5, I think is where we were filled on the daily. I haven't actually got details here, but that's continued to unwind, and that's 300 odd pips to the good so far. Bit of a bounce today on the stronger dollar, but the trend, remains to the downside. So see if there's any more comments this week. See what the jobs data looks like, the ADP for the US and the non-farm payroll on Friday, affecting the dollar yen, and any more comments from the Bank of Japan as well. So that's the three majors. We'll have a quick look at Aussie and CAD as well. Aussie continues, as we were saying all of last week, really can't breach away from the .65 area. So literally rotating through there. But again, the trend remains to the downside. We're under the 20-day moving average, 65.28. So call it 65.30 needs to be breached for this pair to move to the upside. But really a break below 64.70 really. You can see that on the daily time frame. There's our top, and it's sort of coinciding with the 20-day moving average. So 65.25, 65.30. A nice break of that, and we could see a move up to the upside technically, but the floor sits there at 64.70, and we're currently just under 65 at the moment. So again, the bias remains to the downside for the Aussie. Similar to the CAD, we got up to 141 plus, didn't we, in November, 141.75, and we've come back there on a weakening dollar and an improving Canadian situation. Trudeau met with Trump about all sorts of things. They talked about trade. Obviously, Trump's still talking about big tariffs on particularly Canada, Mexico, and China. Obviously, remember the last time Trump was in the White House, they renegotiated the NAFTA agreement, the North America Free Trade Association. They got rid of that, renegotiating, called it Menska or something, wasn't it? can't remember. And it took a long time for the Canadians to ratify it. The Mexicans ratified it, and the Americans ratified it quite quickly. Given that the split in the House as well and the Senate, so it in the US, but actually got through that quite quickly. But the Canadians were quite dragging their feet on it. So this time, Trump has got quite aggressive again with both his neighbours in North America. Obviously, both countries of Mexico and Canada have retaliated rhetorically anyway. But Trudeau's actually been into his lair. He's been down to Mar-a-Lago. Quite some positive spin out of that. Trudeau's talking about trying to tighten up the border as regard to the flows of what Trump calls illegal immigrants from Canada into the United States, and also some trade talk as well. So it was the reports I was reading. It sounded rather positive, to be honest, which is a bit of a surprise. But perhaps Trudeau's playing to his home audience as well, struggling a bit at home as well. So anyway, dollar CAD remains to the downside. To the upside. The 20-day moving average is held here on the downlight. It held that on that intraday basis there on election day, and so that becomes key now. So the 140 is our key pivot area, if you like, and we're off that this morning as the dollar's come back, and the support is getting up there at 139.75. So a break of 139.75 would take dollar CAD lower. A hold of 140 remains positive, even though we had 4 days down last week, having had the big up candle on the 25th. And you see we retraced. I mean, again, the entire range of that day. You can see how we retraced. I love doing this. We've bounced back to the first fib level. Basically, we found support at the first fib level here, and our next resistance is that .6108, the 140.87 level to the upside. But anyway, get rid of that. We've got an update today, so support is there. So again, dollars on the front foot against the weak Canadian dollar, as obviously the oil markets continue to weaken. Sorry, I've been rattling on for nearly 20.5 an hour. I was meant to try and keep this short today. I suppose metals, golds we looked at, and just quick look at the oil market and cryptos before we look at the week ahead. So US oil remains under pressure. We're significantly under the $70 handle. We were down last week. We were down on Friday on the shortened trading day. 68.18 was 68.18, which we'd put on earlier in the week, was tested, and we actually closed below that on Friday. So that's another negative day for oil. Back on its 20-day moving average on the 25th, and continue to move lower. So next support comes down to 67.31 here, and support at 67 itself. So let's just put that in. When we next come back to this, around about 67, $67. There we are. From this, if this 68.18 area doesn't hold, we're up this morning off that. So watch the 68.18, call it 68.20. Next support level, $67 for US oil. To the upside, we would need to break 69.50 to move this higher, and then that would obviously bring in the $70 barrel, but the trend remains to the downside for oil and other energies as well. Crypto, excuse me, and Bitcoin itself, 95,000 this morning from that wobble lower, buying on the dip many as we went into this key level here at 92,500. So it was a resistance area going up. It's an area we rallied from on the 20th. We come back to test it once, so this remains quite positive, even though today we are currently down for the day on the stronger dollar story. But the 20-day moving average for all you crypto buffs and you Bitcoin fans, 92,400, right on the 20-day moving average, right on the floor of the last support and the last resistance area. So it's a key little line I'm going to put in now. You know, these things, sometimes you see them, sometimes you don't, but that's call it a rate because it's a we might be able to move. So that's a key through area 92,200 is our support as we start December. Obviously, all-time high, just shy of the 100,000 mark. Will we break that before 2024's out? It feels like it, doesn't it? Could be wrong. Who cares? Don't make predictions. Just tell you what the chart's saying. This remains positive. The 20-day moving average was last traded under on an end of day basis all the way back here. You see this? All the way back here before we closed a day under the 20-day moving average, and that was when we were still going sideways during the second half, at the beginning of the spread of the fall of autumn and the end of summer, when we were pivoting through 63,000 was our key area. We were down at, this was a day when we closed under 61,200 it was, wasn't it? Oh, we closed the day, where was it? Yeah, 60,700. Just again, it was very much sideways action here. We couldn't break the 63,000 level through here, which is a big pivot area. Took a while, but off we ran when we did ran, and off we've gone, and you know, 40% move. Thanks very much, money in the bank for a trend following Bitcoin traders. So that's where we sit at the moment. Let's have a look at the week ahead and the month ahead. Some key data this week, topped obviously by non-farm payrolls on Friday. Let's do this backwards, shall we? So non-farm payrolls, can you see all that? Let me just get, yeah, you can. Let's move that up a bit. There we are. So we'll go through the month as well. So non-farm payrolls on Friday expected to be over 200,000. I've seen 250,000 from some so far. That'll may tighten up as the week goes on. So 202,000 here on this on the investing.com calendar from the glitch from the two hurricanes last month. We had that 12,000. Employment may tick up. Again, consensus is around about 4.1, 4.2. And average hourly earnings, which was strong last month, but again, sort of may have been impacted by the dual hurricane impact on jobs growth or jobs creation itself. See how earnings are holding up. 0.3 of 1% from 0.4 of 1% last month, annualized about 3 and a bit, still very strong. Private payroll, sorry, let's just do this backwards then, shall we? Initial claims, very strong again last week, 213,000. Remember, it was a May, well, it was January, February 22. So it's we were last down at this level. So 215,000 is expected on Thursday again. Been remarkably resilient. The jobs market, so it's not a lot of people claiming. Obviously, there's people disappearing from the jobs market. That's the thing the Hawks would let us listen to. Some people not looking to find employment. So we'll see how that pans out in the and how the changes to obviously the government support and benefits with Musk and co in charge, how that impacts people as well. So. Those participation rates come key on Friday as well. The participation numbers aren't here, but 63, 64% is where they would like them to be. We're a bit lower than that. Private payrolls on Wednesday, 166,000. This is again another one that can be has been quite volatile. 233,000. It's also quite detached, even with the branding a few years ago of the how ADP count their employment change. So don't read too much into that in comparison to the non-farm payrolls on Friday. But they're still, both of them, which you can see, positive. Positive over the 200,000 numbers. Quite good health. Still a healthy growth for the US. Jobs market. It's PMI week as well. Remember, PMIs are forward looking. The key US ones from the Institute of Service Management comes out on Wednesday as well. 55.5 for the non-manufacturing. That's the services sector, the most important services sector. The S&P PMI numbers are 57.1. So both of them, well, it looks like a bit of a divergence here, one going down, one going up. So see how all that pans out when the data comes out. The second one here, the one from the ISM, is more market impactful than the S&P global ones that come out 15 minutes earlier, which is why they come out 15 minutes earlier, I would argue. Also, I've jumped over a speech from Powell on Wednesday as well, the 4th. I think it might be is he complaining to Congress? I'm not sure whether he is on for Friday. Powell's speaking. Was he speaking on Thursday? Due to a moderated discussion at a New York Times Deal Book Summit and audience questions expected. Okay, so it's not an official like monetary policy scheduled statement or anything to government. It's a sort of a panel discussion, but I mean, some of the questions could direct to how he answers it if there's some aggressive journalists in the room. So watch that as well on Wednesday. The openings, the JOLTS openings under the key 8 million for a while now. 7.5 million we dipped last month. Again, remember jobs openings and churn as well. People moving around. That's what the opening these JOLTS numbers actually count. Mrs. Yellen created this when she was governor over in California. So it's the significance of it maybe dimming as the new Treasury Secretary's getting all her papers in the handover. The very little. Obviously, major political change, policy change. The Treasury don't like things to be too volatile. So, although there's lots of political rhetoric around it, obviously a different view from the government about the Treasury Department, and a bit of a fiscal hawk, which is why we started seeing a potential strengthening of the dollar in Trump's appointment of what's his name? I've forgotten his name now. Pence with P, doesn't it? When did he announce it? It was a while ago, wasn't it? Bessent, not Pessant. That's right. Bessent is the new Treasury Secretary. Different political mold from Mrs. Yellen. However, how much changes again, we'll see in the outcome. Remember, markets love gossip. They love speculation. Buy the rumor, sell the fact is often a truism in markets. But if you're a technical trader, follow what the charts patterns are saying. Follow your system. Try not to get too distracted by some of the chatter and the noise in the markets. It can blow you off course a bit. Today, we've got manufacturing PMI data from the US later on this afternoon. Manufacturing, as you can see here, still under the key 50 handle. 50 means a sector is expanding. So all the the rhetoric of a strong dollar, stock markets at record highs, didn't affect those working in manufacturing. It's obviously people have voted with their feet, have voted with their pockets to an extent. Inflation has hurt ordinary Americans. It's been the line that the Republicans have taken, and it's worked quite positively. And even these forward-looking the manufacturing PMIs, better than many parts of the developed world, but still under 50. 50 is the big pivot point and the feel-good factor, but still relatively weak. If you could see that rising to 50, it would be rather ironic given that the Democrats have just lost the election. So lots of key days. It's the first week of the month. Yes, it's December. Yes, it's the last month of the year, but it's still a key month. Obviously, I say topped by non-farm payroll on Friday. So join us for that. We'll be live during the week for all these events. As far as the rest of the month's concerned, we've got 2 or 3 weeks of key data, and then obviously it quietens off significantly for the Christmas holidays and the New Year, and then the New Year starts. Obviously, New Year starts. Next week, GDP from Japan, inflation out of Germany, inflation across the board from everybody. So one of the core pieces of the data before the Fed and the RBA and the Bank of England and ECB all meet this month as well. So the Japanese central bank are the ones that are looking to raise rates. I think it's on the 18th when they meet, isn't it? Anyway, let's just go through as we see it. First up, it will be the Australians, unlikely to change data, 4.3%. That's likely to stay the same. Miss Bullock last week talked about, inflation. We were prepared to move. So that if there's some surprises between now and then, but we've only got sort of 9 days. It's unlikely that we see anything from the Australians on the 10th. I say inflation out of the US, key for what the Fed may or may not do. Look like they're going to cut again the following week on the 11th. GDP monthly from the UK, and then on the 12th we have the Swiss Central Bank and the ECB with their rate decisions. Again, looks like the ECB are going to go again with another at least 25 basis point. The Swiss National Bank have talked about the Swissy being a bit too strong. It's weak this morning. Unlikely to move again though on the 12th. PMIs again in the middle of the month, retail sales, European and UK inflation on the 18th. Bank of Japan, that's the really one to watch on Thursday the 19th. Rate increase potentially, a rate cut from the Bank of England on the same day, a few hours later. And then we wrap the month with the PCE data. And where isn't the Fed on there? Fed's on the 19th, isn't it? There it is, 18th, not what I'm talking about. So Fed decision on the Wednesday, Bank of England and Bank of Japan on the Thursday the 19th, and then the key PCE price index on the 20th to wrap the third week of December. And really a lot of the monthly trading and end of year trading is done by then. However, as you see here, as far as this calendar is concerned, there's no high impact events left till the end of the year. However, let me just share it with you a little note I used to do every month. So we got all that. So the reasons to stay invested in December are quite significant. We've got a very strong. Let me see if I can show you this. This is from. I thought I had a 2021 here. Anyway, this. Yeah, let me show you. I'll show you this. This is from 2019. Okay, on my views on what we were doing in 2019. So obviously some of the details aren't correct. However, why isn't that moving? It's not moving. Where's the document? It's moving here. Oh, it is moving now, right? This is what I just wanted to bring your attention to. Global stocks traditionally rise in December, especially in bull years. We've had another bull year. So this is from 2019. So the story is still the same for 2024. Last week I said we had a relatively strong S&P 500. But again, we hit an all-time high. Look, it's 2019. We were at 3,150. This is how markets continue to rally. Last month, we're over 6,000 now. This is just 3 or 4 years ago, and this is data that is still relevant now. I've logged this every year. I had it. It was in a book from. I love my trading books. It was a book from David Schwartz, who monitors both the US and UK stock markets, literally with a pen and piece of paper. And he died, unfortunately. But one of the first trading books I bought back in the late 80s, early 90s, and it was relevant then. And so I've just literally manually updated it. So these numbers are still the same. The 2819 is the 10th year of the equity market bull rally. We rose 4.3% in November, and it's up over 6% this quarter. That's still the case for the US 500. We were up. We were up 1.0% last week, and we were up at nearly 4 and a bit percent for the month for 2024. We're now into our 14th year, 15th year of this equity bull rally, and this is the key bit I just want to draw your attention to. Lots of people wrap up their trading year before the last week or two of December. Don't do that. Some of the strongest days for stock markets in particular, so it happen. Likelihood of a rise, percentage chance of a market rising on a particular day. Look at these are the 10 best days of the trading year, and as you can see, 5 of them, 1, 2, 3, 4, 5, all occur in December. And more importantly, they occur in that last week or so of December. So the likelihood of of the stock market, the S&P 500 and the UK 100 for that matter, although the UK 100 is less sort of correlating these days, is it's a 76% chance. So the chance of the stock market rising on the 27th or the 22nd of December, it's over 70%. I mean, all of these are over 70%. So you've got 5 days where you've got a 70% chance. History shows us all the way back to 1970 and beyond, back to the World War II as well, of the stock market rally. And there's only been one December recently where we had a down month, and that was 2018. So probabilities, history is on your side. So don't not get invested. Don't not be playing the markets in these quieter time frames, because history shows us that it's very much one-sided sort of trading. And again, here, this is 2019, same every year. All of the, ignore what I've written here for 2019, but all of the major banks have got something to say. So the Fed are likely to cut, the Bank of Japan are likely to rise, the Bank of England are likely to cut, the RBA, Bank of Canada probably won't do anything, and S&P probably won't do anything. But the others major moves might be something from the Bank of Canada. We'll see. Obviously, there's no general election. And OPEC continue to have a significant meetings in December as well. So yeah, December can be a key month. So don't rule it out just because it's what you think is quiet or things aren't happening. So do get involved. So we'll see you tomorrow. Today, big data at 3 o'clock UTC time, Greenwich Mean Time, for these PMIs. Will they show some sort of chance of beating 50%? So if there's no questions, my friends, I will wrap up. No, let's have a quick check here. There's no questions. So I've been here 45 minutes. So there we go. The best of luck, my friends, and always remember to keep your market risk small. But remember as well, our promotion for our promotion for the Black Friday, the Cyber Monday, Tech Tuesday, as they call it now, weekend is still in place. So check our website out for that. Let me just show you on Insta the promotion. We have a where is it? Should I probably just see it. There we are. Just go there, can't we? It's not showing me something else. Not let me log in. Oh well. Oh, okay. Not showing a promotion on. There we are. There it's on our Twitter handle as well. So our Black Friday promotion, it runs out the midnight on the 2nd of December. That's tonight. So 25% discount off all challenges, and then 150%. So it's all your charges, and another 50% refunded once you become a funded trader. So after your first payout. So it's our best promotion of the year so far. Do come and join us. Fund challenges start from $55, so there's 25% off that, so it's just over $40 to get started. Just come and test yourself. And I say, as I say all the time, the beauty of the valuations, and the beauty of prop trading and whoops. Us in particular is that, you know, the rules are there to keep you in line, you know, and that's what most people, even experienced traders, you know, tend to get wrong. They tend to, you know, breach these rules, which they should be set, you know. So do come and join us. We're here to help, and I'm here to help specifically. So please do join us. So see you all again tomorrow. Have a safe day, and may the trend be on your side, and may the pips be with you, everyone. All the best. Bye-bye.